investing $100 per month in the S&P 500 index. What would that look like? Well, welcome back to another episode of the MD Investor. To see what investing $100 every single month would look like, let's jump into my computer. Before we jump into my computer, just remember, I'm not a financial advisor, and this is not financial advice, just a regular guy on YouTube sharing my passion for educational purposes only. Let's go. So we can't invest directly into the S&P 500 index, but what we can do is invest in an investment such as an ETF that tracks that index. So here we are on the Vanguard website. Ticker VOO is Vanguard S&P 500 ETF that tracks the S&P 500 index, right? Which is the 500 biggest companies in the US, right? And that's how you can quickly get exposure. So today we're looking at investing $100 every single month into this ETF and see the results we will end up with. So quickly, let's review. VOO is Vanguard's ETF that tracks the S&P 500 index, right? It's a management style index. It tracks the S&P 500. Okay, the asset class is domestic general stocks. All the stocks are U.S. based companies. The expense ratio is 0.03, which means to see how much you would pay for every $10,000, you would move the decimal place 4 places to the right. So 1, 2, 3, 4. It'd be 300, and that's in cents. So it'd be 300 cents or $3 for every $10,000 invested. It'd be $3 for every $10,000 invested, which is very affordable. Okay? Each share price now is about $477. So the year-to-date return is about 9.73%. Here it tells you it invests in stocks in the S&P 500 index, representing 500 of the largest U.S. companies. We'll look at the return. VOO over the last year returned about 30%. So a great year. The 3-year return, 11.86%. 5-year return, 14.72%. And the 10-year return is about 12.66%. Since inception, since 2010, September 2010, it's been returning 14.27%. So great return. For the 10-year return, we have about 12%. But over the last 100 years, the S&P 500 has returned about 9.8, close to 10%. So we'll use 10% as our average return. Okay? Now, let's look at the compound interest calculator. So we're saying we are investing $100 every month. Initial deposit is 0, and we will say we'll get a 10% return, even though over the last 10 years they've received about 12% return. We'll just say we're getting a 10% return. After 5 years, we will have a total value of about $7,700. We would have contributed $6,000. And the interest would have returned, and the gain would have been about $1,700. Now let's look at after 10 years. Right? So we're investing every month $100. After 10 years, we would have $20,000. $12,000 was our contribution, our principal, and we have gained $8,000, almost $8,500. Right? That's our money working for us. Let's look at after 15 years. After 15 years, investing $100 every month, we have a total value of $41,000. $18,000 is our principal, that money we invested. $23,000 is the return or the interest and the dividends and the gains that we've gotten. So at this point now, it's important because now our interest exceeds our principal, which is excellent. Right? So the green line over here is our total value, and down here is the money that we have contributed. So let's go to 20 years. After 20 years, we have $75,000. We have contributed 24,000. Right? We have contributed 24,000. But our interest or our gains is 51,900. That's excellent. Let's go to 25 years. Total value $132,000. We contributed only 30,000, and the interest is now over 100,000, $102,000 to be exact. Let's look at 30 years. After 30 years, our total value is $226,000. This is only $100 a month. This is not a lot. $100 a month. People use that for dinner. People use that for a pair of sneakers. People use that for your phone costs more than that. I mean, it's not a lot of money, but look at what it's doing. Total value $226,000. But you've only contributed $36,000. The interest and gains is $190,000 money you did not have to work for. It's been 30 years though, right? 5 more years. Let's go to 35 years. After 35 years, we're now at 379,000, almost 380,000. You contributed only 42,000. The total gain is $337,000. Let's go to 40 years. 40 years, we have a total value of $632,000. You only contributed 48,000. The total interest and gains is over $500,000, $584,000. That's after 40 years, right? Which is usually probably the length of an investment career, right? Assuming you started working at 20, 25 and you retired 65, 40 years. But we can extend this, right? This allows us to extend it to, I think, up to 50 years. So let's go to 45 years. At 45 years, your portfolio have crossed the $1 million mark. You're at the 7-figure mark now. And you've only contributed 54,000. So only 5%, less than 5% of the total value of your contribution. The other 95% plus is your gains, $994,000. That's amazing. And that's the power of compound interest. And we'll go to 50 years, which is the max this calculator allows. You have a total value of $1.7 million. And you've only contributed 60,000. You've only put in $60,000 of your own money. The other almost almost $1.7 million is gains. That's your money working for you. And you may say, and if this calculator was able to let us do longer, 55, 60, you'd see their contribution percentage would be getting smaller, and the interest in gains would be getting larger. And you may say, well, where would I be investing for 50, 60 years? In a custodial brokerage account, perhaps, right? When your child is born, you open a custodial brokerage account and you start contributing $100, because they have time on their side, $100, $100, $100, $100, $100 every month. Go about your business. When they turn 50, wouldn't it be nice to tell them, hey, you got this portfolio here that mom and dad have been working with, and now it's at X amount, and you can continue it. Maybe they can start putting more money into it, right? So this is a great inheritance to give your kids. It's a great legacy. There's a great head start to give your kid, right? Or your grandkid. The Bible says a good man leaves an inheritance for his children's children. Okay? Again, guys, this is the MD Investor trying to motivate us by increasing our financial IQ so we can break the cycle of generational poverty. Don't forget to subscribe on YouTube. And until next time, continue to command your money to grow. MD Investor out.